Welcome back. You're watching Stock Watch, and joining me to unpack your stock-related questions this afternoon is Graeme Korner from Korner Perspective. Start sending your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, Graeme. It seems that local is not lekker today because the JSE is in the red and the rand is literally at 19 Rand 29 as we speak. I think it was at 19 Rand, over 19 Rand 30 at some point against the US dollar. Why is the local market just in a sour mood today?
It's a good question. You always try and explain what's going on in other people's minds. We had a very good day yesterday. I think out of the top 40, only 4 shares were down. So it was pretty broad-based. But I think, one possible explanation is maybe people are saying, well, you know what, the Nvidia train is going to carry on for a very, very long time, and we should be playing this AI theme. So maybe people are saying, well, why go and invest in equities on the southern tip of Africa when you have, companies that are, increasing their profits, threefold in a year. So that might partly explain it. But I think also, if you look, Europe today looking a little bit dull. So I think on balance of arguments, maybe we got a little ahead of ourselves yesterday. As you can see, today the weakness is fairly broad-based. Telecoms and banks kind of leading the downside. Financials generally quite weak. So I think maybe some people were a little relieved after, a non-event budget. And initially people responded very positively to the Nvidia story, but it might be a case of, there's a finite amount of cash looking for work, and they'd rather invest in the Magnificent Seven than in South African banks. So that's my best attempt to explain what might be happening.
And just delving deeper into Nvidia, it seems that there's no stopping this train. And investors were asking ahead of these results. It's run so hard. Should I take profits? At this point, and even investors that hadn't been invested were wondering if they should still go in or if they had missed the boat. Is there no missing of the boat at this point? At this point now that it's run hard again, do you think that maybe investors should start taking profits? How would you be playing Nvidia at this point, whether you're in the stock or not?
Well, we're not really playing in that space. I think maybe another reason why SA Inc. is maybe underperforming what the world is doing. If you just look at results and updates, and I'm sure we'll unpack some of them. There was a lot of somber news. You saw mighty companies like Anglos and Pick n Pay and Tiger Brands all sort of telling you it's a difficult story. But coming back to the AI theme, when a company shoots the lights out to the extent that they do, and exceeded expectations. I think fourth quarter revenues were up something like 400%. So clearly the AI chips and related products are very much in demand. The AI theme seems to be here. The problem with that is, I remember a few years ago when Nvidia took off courtesy of the Bitcoin mining craze, and that also came back. So I think what we're seeing in a stock like Nvidia is, off the charts, hundreds of % of profit growth and sales growth. So it's very difficult to model it. If you look at it on a simple PE or PEG ratio, you say, it's ridiculous the level of growth you're getting for the multiples that you're paying. But the question is, when will that growth start to moderate, and how much of that AI spend, let's say, on Nvidia's products has been almost front loading, and then once it's done, the base is there and it sort of stabilizes. So I think that's the $1 million question. For now, I think people are feeling very comfortable. Guidance is also that this current trading environment remains very, very supportive. So for now, the trend will continue. I'm probably more worried about the rest of the Magnificent Seven.
Okay.
So not. We hold Microsoft, for example, and we hold another company called Micron. which is, I suppose, somewhat similar to Nvidia. But the reality of it is that, if you look at a company like Microsoft, brilliant as it is, wonderful annuity flows, it's on a telephone number multiple in our view for a company that is really actually moved more into utility space. So there seems to be a bit of a disconnect. So I would, as always, just urge people to apply their minds to why you're buying something. And I think the theme of buy the Magnificent Seven for AI, I think, is a very questionable strategy. And in my mind, probably Nvidia is the only one of that group that really is a direct beneficiary. So I would, it's a very long way of saying I don't know, but I would probably just sit it out and see where sales stabilize, in the next 6 months or so.
Well, talking about telephone numbers, Pick n Pay needs telephone number money. Graeme, did it come as a surprise that Pick n Pay is actually now pursuing a rights issue?
Look, I mean, we're not terribly close to it, Our preferred has definitely been ShopRite for a long time. I think I was surprised, and truthfully, I think management was surprised as well. I think it was in part brought on by a very difficult trading environment. They've been investing quite aggressively in rollouts of Boxer and clothing, for example, and obviously spending money on ASAP. So I think it probably just reached the point where almost 8 billion rands worth of debt probably just caused the lenders to get a little bit anxious. So I think, but yes, I got the feeling I was surprised, but I think Sean Summers and company were somewhat surprised too at the rate at which they've been sort of having to spend money, and the core operations, particularly the supermarkets in South Africa, didn't have a great festive season. So, I think the short answer is I was quite surprised. Also, not necessarily just by the rights issue, but by the size of the rights issue.
Yeah, it's a lot.
4 billion was, as at I think the start of trade yesterday, is probably about a third of the market cap. They're going to have to put this thing away at a fair discount in order to entice, because there must be an underwriter, I assume. But I think the reality is there's going to be a massive dilution, as we've seen in other companies, where you have to raise capital at very, very discounted prices. So I was surprised mainly by the quantum.
Yeah. Does it worry you that it seems that Pick n Pay is headed on the same trail as Transaction Capital? Transaction Capital got into a lot of trouble and then now said that they're going to be listing their good business, We Buy Cars, and now Pick n Pay is also doing the same thing, where they're saying that they want to list their good business, Boxer.
I don't know. I think they're very different. They've obviously both had their fair share of challenges. I would argue, in spite of us sort of speaking about the dramatic size, etc., of the rights issue, I don't think Pick n Pay is in trouble per se. I mean, the cash burn is in large part because of the fact that clothing, for example, and Boxer are trading very, very well. But so I think they're quite different. But I don't think there's anything fundamentally wrong with listing a small block and then having the opportunity to monetize that, because the reality is Boxer seems to be trading very, very well. If you can diversify that shareholder base, it would be good, because otherwise we're in a situation where if Boxer itself needs to expand and raise capital, we're in a situation where they are constrained by the parent's balance sheet. So I don't see it quite the same as the Transaction Capital, although there are similarities.
Yeah. And I mean, just lastly, you're not in Pick n Pay, but as a shareholder or someone that would like to get in on the Boxer train, what do you do at this point? Because we also have seen that share price recovering today after that major hit yesterday. So seeming that some investors are going into Pick n Pay. Do you go into Pick n Pay and wait for the listing, or do you just, if you're not in the stock, maybe just wait for Boxer to list at this point?
Well, I would probably wait for the detail on the rights issue. So because the reality is, if you buy Pick and Pay today at 23 Rand 28,
Yeah.
and they say, we're doing the rights issue at 19 Rand because that's where we're comfortable, with the advisors that we'll be able to put this away. You might as well wait. The alternative is you could wait for the nil paid letters, and you can buy those, and then just follow your rights. You'll save some costs. So I would wait. Frankly, I would wait. I think it. I commend management for the bold action and taking this thing by the scruff of the neck and having the courage to do a big placement and basically say, listen, we need help. But it's going to take time. I think the core the core Pick and Pay stores are not performing, and they're not going to turn the corner overnight. And mainly because, as I said, our holding, which is ShopRite, is absolutely flying. The model is working. The 60-60 compared to ASAP is a vastly superior thing. They're gaining market share. They've been gaining market share, I think, every month for like 5 years. So it's not as though they raised the capital and then suddenly everything is fine in the core supermarket business. So I think, yes, I think there's a lot of optionality here because I think at its core, it is probably still a pretty decent business. And I think with the right leadership and vision, this thing can come right, but it's going to take time. So I would probably just wait. The reality is there's so many bargains in the South African market. This could be a phenomenal return opportunity, but I can probably list 10 shares, off cuff of companies that I think could double over the next 2 years simply because they're so ridiculously cheap right now. So I think that's the other backdrop, that there's a lot you can actually do with your money in the South African equity market.
All right. Well, let's come back to the South African equity market. Amplats, the miners, Amplats, Kumba Iron Ore, you spoke about bold actions. They're retrenching so that they can cut their cost bases. Of course, dealing with a number of issues with Amplats, main issue being the prices that really don't seem to be finding upside at this point. And then Kumba Iron Ore dealing with Transnet issues where they're having to limit their production. Let's start off with Amplats at this point. Considering the fact that they are doing what they can internally to kind of be able to, operate in this kind of environment with these prices, should you stay on and just wait for it and ride out the pressure?
Yeah, so I think the way I see it, we generally don't hold Amplats or direct commodities. We would hold the diversified for our clients.
Okay.
And of course, Amplats and Kumba and De Beers has also had an effect on Anglo itself, and we've seen, them also having to take some fairly tough decisions, probably. But I think if I look at Amplats, I think they a few years ago took the strategic decision to reposition the business into lower costs. So I think. My sense is the hydrogen-powered economy is an interesting one. You saw in the budget, for example, the incentives not just for EV manufacturers but also for hydrogen. And I think there is optionality there. If hydrogen takes off, it could be very good for the platinum producers. But I think we're in a very difficult phase right now where the demand destruction in some of their core offtake markets is very real. So you've got this, I believe, almost across the board in the PGMs. You've got excess supply now, and demand is starting to wane. But if I look at it, I'd say, well, if I took the big players in the world, and you can add the Russians and the Canadians to the equation, if you take all the PGMs. My sense is that the higher cost, more labor-intensive businesses are really going to battle. And I would imagine that somebody like Amplats could actually be left standing and could then, if this hydrogen economy takes off, be in a beautiful position where they've got the resources, they've got the capacity to increase production, and they're doing that into firmer markets, and some of their competitors might have permanently or at least long-term of mothballed capacity. So I think Amplats is a very interesting play, but it's not for sissies, as they say. I think it's going to be wild. You've seen just this week, it's been all over the ballpark.
Yeah.
But I think if you are looking, if you're an aggressive investor, or you like the commodity space, I think Amplats is looking quite interesting. As I say, we generally don't hold them for our clients, but in our unit trust, we bought some a couple of months ago, and I think, if the PGMs are not dead and buried, then I think Amplats will be a winner, but it's probably going to take a little while for that to unfold.
All right. Well, let's shift gears and go into hospitality. Hotel Group, City Lodge, they're releasing results today. There's a question here, your view on City Lodge ahead of the results.
Yeah, so I think City Lodge, obviously, we were talking a little while ago about the pain of diluting your share, or, issuing a lot of shares at very, very low prices. Obviously, City Lodge experienced that when they had to refinance in COVID. And they're basically just trying to get everything together. If you look at the core of the business, and it's a business we actually quite like. The most recent update before today showed that occupancy levels were back at pre-2019 levels. I think the management team have done very, very good things, apart from the balance sheet, which was kind of forced on them. But there's a deep underlying value there. They've done really good things operationally to, if you look at like the progressive pricing model, the dynamic pricing model for the rooms, as well as fixing, in inverted commas, the food and beverage offering. So that's actually now becoming quite a decent play. And then also, I think quite interestingly, they've actually become somewhat more of a balanced play, where historically it was very much business travel. They're starting to see some more tourist type activity, and also I think we're moving back into this after this sort of, although we all are, like we are now, accustomed to dealing digitally, people still want to see their relationship managers and their salespeople. So I think business travel will start resuming. So the short answer is, I think it's going to take City Lodge a while. They could make the same aggregate profit, but of course, when you divide that by telephone number of shares in issue, it doesn't look great.
Yeah.
But it's a business we like. We think it's very undervalued, and we see it having a fantastic underpin in those rooms. So if you took that view, our sense is it's trading at a big discount to fair value. So yes, I think it's a good business. It's well run, and I think it'll trade well over the next few years.
All right, we'll have 30 seconds, Graeme, for your stock pick. What will it be?
Yeah, well, I think for me, the value, we've seen the big banks, for example, run quite hard. I've called ABSA before. It's kind of, the wicked stepson of the market at the moment. So the other banks have been strong. ABSA, in large part, has languished. My bottom line is, I think it's just too cheap. You're looking at a multiple of under 7, a dividend yield of, around 8%. It's just too tempting. So I think if you're looking for big cap, solid with upside, I think ABSA is a good one to play.
All right. Well, thank you so much for your time and for your analysis today, Graeme. Really appreciate it. That was Graeme Korner from Korner Perspective.